We've been talking a lot about some of the technical levels that I guess got breached to the upside, what was it, about a week and a half ago? And then, of course, we saw them fall back below some of those key technical levels. And everyone's trying to make sense of whether that was a harbinger of doom or maybe we get another reset once we get the Fed out of the way.
Well, we did see the S&P 500 make another lower high, and to me it was an extension of the bear market cycle that really manifested itself at the start of the year. I think what you're referring to in terms of the false breakout to the upside was maybe the 50-day moving average, and of course now we're right back below that. In fact, we're down to now only 25% of the S&P 500 above their 50-day moving averages. So definitely a big significant pullback on the back of last week's CPI data, and the reaction does show a bit of a fickle tape, sort of a skittishness to the market, and I think that will remain the case here in the near term. Our indicators do point lower for the coming weeks, and the significant level on the downside that we're watching is approximately 38.15 for that S&P 500, and that's based on a Fibonacci retracement level.
Interesting, because Katie, I was reading some other notes, and when you think about the most level that has the most trading around it within the S&P 500, it's around 3,900. This is BTIG saying that, and then once we broke below that, they were thinking maybe 36.40 and a retest of those June lows. How do you think about the importance of a retest or not of some of those June lows relative to levels that you're really looking at?
I think it's highly likely that we do see those summertime lows not only retested but taken out. We've seen a lot of breakdowns develop from a bottom-up perspective. NVIDIA, Meta, it looks like Google's headed that direction, perhaps even Microsoft, Adobe. We've had a lot of examples in large cap tech especially of that support being broken, and I think it sets a bad example for the major indices as they come into these key long-term levels. So the June lows to me weren't very significant support, but rather a successful test of that Fibonacci retracement level, which is, if it is broken as well, that would target about 3,200 for the S&P 500 with a time frame of maybe 6 months plus.